If we're in the final year of this Bitcoin cycle, why hasn't the price exploded higher yet? Why does this cycle feel disappointing even while corporations relentlessly ramp up buying? Meanwhile, a rare and dangerous split is unfolding. The US dollar is weakening while bond yields surge. And how does this all connect to demographics, macro cycles, and Bitcoin's next explosive move? Today, we're unpacking the full story of this moment in Bitcoin's market and why it may mark the final great rotation before the supply crunch of the century. The Bitcoin price action in 2025 has been confusing for a lot of people. Sure, we hit recent all-time highs of 112K, but the parabolic price move many expect in the final third green year in the 4-year Bitcoin cycle trend hasn't materialized yet. In Bitcoin, we've come to expect fireworks and a violent and euphoric run in the final stages of a bull cycle. Instead, we've had smaller runs, shallow corrections, choppiness, and overall boredom mixed in. So what gives? The truth is, this cycle is playing out right on schedule, but it doesn't feel like past ones. Because this time, who is holding Bitcoin is changing fast. We're not watching a failed breakout. We're watching a massive rotation play out in real time. Old holders, even some long-term Bitcoiners who have been sitting on huge stacks for years, are using prices above the 100K psychological barrier to take some profits. At the same time, a new class of buyers is stepping in, and they're not here for short-term gain. They're institutions, corporations, and public companies executing long-term treasury strategies. Michael Saylor explained it well in a recent interview on the Coin Stories podcast.
When the rhetoric has changed from the White House and we have the strategic Bitcoin reserve and all these tailwinds, you're buying pretty much every Monday. Why isn't the price at 150 or 200K?
I think we're going through a rotation right now where lots of non-economically interested parties are rotating out of the asset and a new cohort of investors are entering. A lot of Bitcoin was, for whatever reason, left in the hands of governments, in the hands of lawyers, in the hands of bankruptcy trustees, like the FTX bankruptcy, and they had to hold it for a year or 2 years as they're working through their process. And then when they saw this massive market rally, I think a lot of those trustees, they don't have a 10-year investor's mindset. They just thought, well, this is a good exit point to get liquidity. So I think people less committed to the long term have been taking this opportunity to exit the market. And I think a whole new class of investors are entering by way of the ETFs and by way of the Bitcoin treasury companies.
I think Saylor is right on the money on this one. Bankruptcy trustees, government wallets, whales, some are cashing out. And that Bitcoin is going directly into ETFs, corporate treasuries, and sovereign grade balance sheets. And the intention is not to trade for short-term gain. The Bitcoin these players are buying are being locked away. And that's changing the whole dynamic of the market. Swan CIO Ben Workman summed up the mechanics of what we're seeing in an interview with CNBC at Bitcoin 2025 in Las Vegas last week.
So are you optimistic that Bitcoin will surpass that new all-time high just under $112,000? Fundstrat's Tom Lee, he joined CNBC a couple of months ago and he said that he thinks Bitcoin could hit $150,000 this year. Do you think that's feasible? What's your prediction?
I do. Yeah, I think it's going to get into the high 100s for sure. I would not be surprised to see it in the 225 to 250 range at some point. What you're starting to see is this really large structural bid coming in underneath it. And a lot of these corporations that are buying it, they're long-only buyers. They're not traders of Bitcoin. So they're using it truly as an asset to capitalize on the balance sheet. And when they do that, they're not intending to sell it. So you're seeing all this capital flowing into the markets and into these companies, and that's taking Bitcoin off the market. So when that float starts to shrink, but that buying pressure continues to increase, you can see some really explosive things happen in the price of Bitcoin, and that comes back to that inelastic supply to demand. It doesn't matter how much demand there is, there's no more Bitcoin coming to the market for them to buy.
When long-only capital meets an inelastic supply, the effects don't show up all at once, but they do show up. This is why Bitcoin is holding higher levels than ever before, even with corrections along the way. It's not hype driving this cycle, it's structural demand. And as Ben points out, once the remaining float dries up, things can move fast. And if you understand the kind of structural demand Ben's talking about, then you'll also understand why long-term strategy matters more than ever. At Swan Private, we help high net worth individuals, businesses, and family offices build long-term Bitcoin positions with full guidance and support. We want to partner with you in helping build generational wealth. If you're managing serious capital and want to understand how to allocate strategically in this phase of rotation, go to swan.com/private and schedule a free call with a member of our team today. Okay, let's talk about where we are in this cycle. Swan CEO Corey Clipston did a fun hypothetical breakdown based on previous cycles and trends. He first lays out previous cycles' trough to peak growth. In 2013, we went from $2 to $1,100, which was a 550x. In 2017, we went from $180 to $19,700, which was a 110x trough to peak growth. In 2021, we went from $3,150 to over $69,000, which was a 22x. And this time, we already broke the pattern. If this cycle does a modest 11x from the 15K low in 2022, that puts us around 174K top. In the expected bear market, instead of an 80 to 90% crash like past cycles, Corey points out that a 68% drawdown would be a huge sign of maturity and adoption. So translation, the downside risk is shrinking, while the upside is still massive. Bitcoin's 4-year cycle isn't necessarily broken. It could just be evolving and scaling along with the network. And as this rotation plays out on chain, the macro backdrop is starting to shift dramatically. In a rare and dangerous split, bond yields are rising as the US dollar is falling. That's not supposed to happen, and it's a massive red flag for global investors. James Lavish broke it down on a recent episode of What Bitcoin Did.
And so the issue is that you start seeing companies closing, defaults, and it kind of rolls because then you have this guy default that might trip somebody else default, and then because you have this guy's depending on this guy, so there's some contagion there, and then you just start getting people laid off, and they start getting laid off these companies. Unemployment starts to rise. You go into a recession, yet prices are still going up. It's awful, and that's where the stagflation is. You've got the market coming down, prices of everything going up. Investors will flee to things like gold, and I think they would flee to things like Bitcoin because you still have inflation rates rising. Now we're running such high deficits, fiscal deficits, and you get into a recession, it just makes the deficits wider. The whole world, it's not just the US. I mean, our whole foundation is built on borrowing, leverage, and debt. And so that means that you must have expansion of leverage and debt to keep going.
This is stagflation pressure. Rising inflation, slowing growth, and political dysfunction. Investors are looking for stability outside the fiat system. And that brings us right back to Bitcoin. And sometimes it's the quietest transactions that reveal the biggest truths. Just this week, stablecoin giant Tether moved $1.5 billion worth of Bitcoin, or around 14,000 BTC, in a single transaction as part of their investment in the new Bitcoin treasury company, 21 Capital. The total fee for this giant transaction? Just $2. That's a 0.000000001% transaction fee, quite possibly the lowest relative cost for a large-scale settlement in the history of finance. And of course, it happened on the Bitcoin time chain. And this is what the rest of the world doesn't fully grasp yet. Bitcoin isn't just a speculative asset. It's a monetary settlement layer that is vastly underpriced for the value it delivers. And this isn't just capital rotation, it's a generational one. The silent generation trusted gold. Boomers made their fortunes in the S&P 500. Gen X piled into tech and the NASDAQ. And now, millennials are just starting their wealth accumulation phase. They stand to inherit trillions from the boomers, and they're allocating to Bitcoin. This isn't a bet, it's a demographic inevitability. And over the next 10 to 20 years, it could push Bitcoin to levels we still can't quite wrap our heads around. So here's what all this means. Bitcoin is changing hands. Some longtime holders are taking profits, some massive entities are exiting, but the buyers replacing them aren't here for a trade. They're here to own it indefinitely. So if you're thinking about selling, ask yourself, do you really want to sell your Bitcoin to BlackRock, to Apple, to sovereign funds? Because once they have it, you're very likely never to get it back. So hold tight and think long term, because this is the last Bitcoin rotation. And if this resonates with you, if you understand just how big this shift is, then you'll want to be in the room with others who see it too. BTC Prague is coming up in June and is Europe's premier Bitcoin-only conference, gathering thinkers, builders, and leaders from around the world. For more info and tickets, visit btcprague.com. And back in the US, this September, BTC in DC is bringing Bitcoiners to the heart of Washington to help shape policy and signal strength. Visit btcindc.com for more info. And a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So do you think we're witnessing the final big Bitcoin rotation? From soft hands to strong ones? Are you stacking harder or taking profits? And how are you thinking about Bitcoin's role over the next 10 to 20 years? I'd love to hear your thoughts, so drop a comment below, like this video, share it with a friend, and subscribe to the channel for more pure Bitcoin signal. And as always, stay humble, keep stacking, and trust the process. Thanks for watching. TikTok next block.